Hey everyone, welcome to today's video where we're going to continue to talk about NIO stock. A lot of good news is coming in regarding the reception of Onvo L90. There seems to be a huge demand and a lot of interest in the showrooms from the Chinese customers. So it looks really good. Potentially we are looking at one of the best receptions of any NIO car in the past couple of years, maybe even as far as I can remember. If they can sustain that kind of reception, and there are a few tricks up their sleeves that they can use. Obviously we can see that compared to the competitors, which in this case could be mainly the Li Auto L9 and also L7, it's priced very well, even with the battery as a service. As David here, David Abitpol, giving him a follow. I've been following him for a while now, so it's a really good information. So I agree with him there. It's really well priced and positioned in that regard. We can also see that generally the buzz about this car is really high. I've been quite conservative on NIO, as you know, over the past year at least. But in this instance, when it comes to Onvo, I'm starting to see let's say more bright future, at least for Onvo. Again, this is only for the delivery numbers. I'm not talking about financial stability of the company. That's a whole different question. But in pure spectrum of like looking at how many Onvo deliveries they will be able to do, it looks quite promising. Do not forget that already the L60 is delivering, let's say 1500 plus minus 2 or 300 every week. So one week it could be 1200, the next week it could be 1800, but on average roughly 1500, right? At the current stage. That is only a single car. What's gonna happen with this kind of interest in L90, if the interest is gonna be sustained over the long term, most likely this kind of peak interest will not be sustained over like many months, but at least if we have this high interest in the beginning, probably even after like a few weeks of cooling down a little bit, it's still gonna be quite high. I would say that 2 months from now, I'm expecting with this kind of Onvo deliveries of around, I don't know, like combined L60 and L90 of at the very least 2800. Like every week I'm expecting on average of 2800. Now it would mean that one week could be 2200, the next week could be 3600, right? So the same way like we have currently averaging 1500, one week is 12, one week is like 1800. But that's my expectation. So almost 3000 in like a couple of months from now, every single week, which would be a monthly run rate of around 13 to 15,000 cars from Onvo. That's really nice, because if Onvo can do 15,000 cars and if Firefly can do, I don't know, like 4 to 5,000 cars, that's 20,000 cars there. Then you add to it the traditional NIO brand doing on average, let's say 3,000. I would say 3,000 is quite realistic. This past week, week 30, we got 3,250. The week before, 2,500. So let's say 3,000 by 2 months from now. That's another 13,000 cars only from the classic NIO more expensive car brand, right? ET9, ET7 and ES8 and all these kind of cars. Which would mean that NIO would, on paper, already like in September be able to do, I don't know, like 35,000 cars. It's a huge improvement compared to what we currently are having. Look at the average right now on the blue bars here. You can see that the best month, bar the one that we had in December of last year, if you exclude that one, the best months are currently like in the past 3 or 4 months from April to July now. We can see that they're around 24,000 cars or so. So if we see a jump from 24,000 cars to, let's say, 33,000 cars or maybe 35,000 cars in September and October, I would be quite happy. That would still mean that the estimated 2025 number of car by end of this year should be around 320,000 now, which is well below their own expected like 440,000 cars, which they mentioned in end of last year. But in any case, that is still like 320,000 cars. That's a good like 40% increase compared to last year. So I would be happy with that for sure. You can also see here that the L60 may be the lowest lightweight mid-size pure electric SUV on the market, at least compared to like Model Y, the Xpeng G6 and Xiaomi YU7 and a bunch of other cars. So it points the picture that NIO is for sure, in terms of R&D, like not all of this money is wasted. Don't forget that that's never been my point of view on NIO. I understand that they are very bloated, but some part of the money in R&D for sure goes to the right stuff. For example, they're making really nice looking cars. They're like conscious about the design. They're really conscious about the interior quality of it. I've actually been working in a lab in essentially a global OEM and testing like the interior quality of the car. So when I test drive the NIO in my city here, I always felt like, wow, this is a really, like, you feel like you're in a Mercedes. So that kind of quality you for sure feel in the NIO car. So yeah, so the quality is for sure is there, and the safety features. Remember that if you look at Tesla, for example, everyone talks about full self-driving. Tesla relies still to this date only on camera and vision only, and I do believe that vision only full self-driving can work in some instances, but you would never expect it to outperform a car that can make a solution with like a vision, with radar and with lidars. I don't think like in the long term, I don't think it's any car with only vision can outperform a car that has those kind of three systems combined. That's my point of view in any case. So I would say that NIO is ahead of Tesla in my opinion, because Tesla is putting too many eggs on this like vision only full self-driving, which I don't believe. I mean, what happens when there's fog? What happens when your vision is blocked? Some of these other sensors like lidars and lidars can still work even if there's some amount of dirt in front of the sensors. The vision is like completely blind, and then you have the discussion about nighttime driving and all like sun flares and all this kind of stuff. So I simply do not believe that, and that is why I still to this day agree that Tesla is just so like too expensive currently. And this is coming from someone that invested in Tesla back in like 2018, 2017, 2019. I was like at some stage, I believe I had like 70 to 80% of my portfolio in Tesla stock, and I was like this super bullish guy on Tesla. And then I would say on the past 3 and 4 years, I'm starting to like reevaluate my position on Tesla because the fundamentals have changed. Back then in 2020, it looked so great because they had like margins, like they would make like 30% margins on the cars. Today they cannot do that. So I simply do not understand how this car, based on it still being an automotive company, people talk about Tesla Optimus and full self-driving. That's not going to come anytime soon. And I do not believe for a single moment that Tesla is going to be the only, company on the planet that's going to have full control over the market of the likes of like robotics, like Optimus and full self-driving. There's so many competitors out there. So there's no way that this company could be like having high margins in those areas in any case. So all the like, this $1 trillion market cap is today is essentially relying on the car business that is like giving them a price to earnings ratio of a couple of hundred almost. I mean, what is the last earnings was like 33 cents if I recall in the last quarter, just reported last week. 33 cents per quarter times 4, that's like 1.2 US dollar. The stock price is currently at like what, 320. So you do the math, it's like almost 250 price to earnings ratio. So it's like, for me, it's just like, I simply don't see Tesla as a good investment at the current stage. But in any case, let's go back to, let's say, the weekly delivery numbers. Compare, for example, Tesla and to NIO and Xpeng. You maybe grown usual to this graph here, but you can see that in my own graphing, as usual, Tesla is, there are some weeks that they are outselling NIO and Xpeng, but to maybe a lot of your surprise, NIO and Xpeng have been outselling Tesla in China for the vast majority of the weeks of 2025. At this point, I don't see any way that Tesla will outsell NIO and Xpeng in 2025, and in fact I would say that 2024 was the last year that Tesla outsold NIO and Xpeng combined, and probably by 2030 NIO and Xpeng will both of them outsell Tesla by themselves in China. I would say that, yeah, for sure. That's my at least understanding at the current stage. Looking at the other also graph here with including Li Auto and the weekly deliveries, Li Auto in the green, Xpeng in the pink, NIO in red and Tesla in blue. And you can see that there's been like that single week of week 26 where Tesla had like 21,000 deliveries almost, but I believe that was the last week of the quarter. So they try to like push out as many cars as possible in exporting from China to Europe and all this kind of stuff. But you can see that the average for them is much lower, whereas the rest of them are more stable. We should also talk about the NIO financial strength of the company, and I would say that one of the reasons why I don't agree, for example, with this gentleman here, I appreciate this video, half an hour long. I for one know how much energy and effort it takes, but I respectfully disagree with a lot of the stuff that is shared in this video. I see he's coming from a good place, but I think it's not fair to say that NIO has a potential of $100 in 6 months. I mean, anything is possible for sure. We could, I don't know, like go to 500. I don't know, but what I'm saying, like, I don't think this is realistic. For the reason for it is simply the financial fundamentals of the company. The last earnings that we had, they made almost 1 billion US dollar in net loss. This Q2, which was finished just weeks ago, they delivered 72,000 cars. So their revenue will be increased by 60% or so compared to Q1, which again was the last reported earnings. But then you had a bunch of other stuff. For example, the operating expenses, I see that it's probably going down. They're doing the right changes in the company structure. They're trying to be more lean. They're trying to reduce the expenses. So I see that. And also looking at for example, the NIOs, I think the battery swap discussions that we had previously, in my opinion, they have been expanding too many swap stations at too short of a time with very little demand. You can see that swaps per station currently at 26, which is well below like the maximum capacity. I think like 420 on the newest ones. And then you can see that they built 430 new swap stations just this year, essentially a little bit more than half of a year. So you expect them to reach maybe 700-800 new swap stations with very little demand out there for them. So I don't see this so there's a lot of, again, potential cost savings in addition to the ones that the management has been saying. But in any case, I expect the operating expenses of the company to go down maybe by 40-50 billion in Q2, and then maybe stagnating a little bit, because I still see that the SG&A has to essentially be there, because this company is trying to come to 100,000 deliveries by Q3 or Q4. So I don't see how they can go from having 600 million or so in a budget of SG&A and then selling 40,000 cars in Q1 and then going to 110,000 cars and still having less budget than that. So I would say let's stick around 600, potentially reducing the R&D budget. I don't know. But in any case, even with all of this, and even looking at with the average sales price not necessarily coming down too much, because why do I say that not coming down too much? Well, if you look at the 108,000 number, right? Most of those 108,000 cars won't be like the ET9 or ES7 or the expensive NIO premium brand. Most of that will be Onvo and Firefly, with much lower average sales price. But still, I try to have an ASP of just around 30,000 US dollar, and still with not the most aggressive total operating expenses, but still reducing it substantially compared to the peak of, I believe, around 1.1 billion US dollar in what would be Q4 of last year, or around 1 billion in Q1. It's still going down. I still don't arrive on net income. Maybe just making break even. But in any case, even if they do, their cash position is not that big. I mean, sure, they by Q2 earnings that we're gonna have maybe in 4 or 5 weeks from now, they raised some cash in April, so maybe this position is gonna be higher with that kind of capital that they raised in April, if I recall correctly. So maybe this 2.3 billion would be let's say even 3 billion, right? That's not a whole lot of money for a company, especially with a automotive company. So I wouldn't say that it's totally unrealistic that they might do a final dilution before they actually become profitable for continuous pace, right? So there's still some clouds out there. So I would say again, I respectfully disagree with this gentleman. I think there are substantial risk with NIO yet again. We have to be patient. So I think this is, in this up and coming 6 to 9 months, we will for sure have our answer to NIO. I'm not arguing from either side currently. I've been a previous super bull. Now I have to reconsider my position. But I would say that I wouldn't expect NIO stock to skyrocket like this guy says. Maybe in the best case scenario, if the company starts to become profitable or at least break even by Q4, I can easily see them going to 15, maybe 18 or 20 US dollar. That is still crazy, 400%, right? But if you're talking about 100 US dollar, I don't know, I mean, that would require the company to maybe do half a million or even 700,000-800,000 deliveries. And then in addition to that, making at least a couple of billion of net income, because the company is currently valued at 10 billion US dollar, right? If this company would go to 100 US dollar per share, that's 20 times the market cap. 20 times 10, that's 200 billion. So you're saying that someone would value this company at break even, plus minus zero essentially in profit, at 200 billion? I don't think so, especially like knowing that this is a Chinese company and the US investor usually doesn't necessarily like put that much trust in a Chinese company. In addition to that, imagine relative to Tesla, because Tesla in my opinion is super overvalued currently. So it could be a case where if this stock is starting to like nosedive a little bit here, like let's say it goes to like a cut of the price by 30%, right? And the market cap goes to 700 billion, then I don't expect NIO to be like at 200 billion. But I said, like, can I see this company go to 15 to 20 US dollar if they make break even? I for sure do. The only reason that I'm a little bit on the edge is because of the risk of potential dilution. I'm actually quite interested in your point of view. If you're honest about this, do you see that NIO might raise capital one last time? So I'm not saying that they have to do it, but maybe like this cash position is a little bit too thin. I don't know, but in any case, I'm gonna leave you there today, so not to make the video too long. But in my opinion, the biggest positive here is the L90 and the Onvo brand overall, which is quite like interesting that it was such a negative picture earlier in the year because they overpromised by a humongous amount, and we were right to criticize the management. But now when we put that past us, it looks like the Onvo brand is actually the biggest shining bright star of the company for the moment. So anyways, thanks for your time, and yeah, see you in the next one.